Hi everybody. So today we're starting our financial analysis toolbox series with what is a cash flow forecast. A cash flow forecast is one of the most useful tools you're going to have at your disposal for any business owner. It's used to predict the income and expenses in your business and allows you to manage your cash position. This is an example of a very basic summary of a cash flow forecast. So let's just look at it very quickly. I have the months across the top. It's usual to use a monthly forecast if you're planning for your business. So if you're looking at a financial analysis plan, you'll be looking at the next 12 to 18 months. You can also use a daily forecast, weekly, or an annual forecast, but I prefer the monthly forecast version. I just think it's much simpler and easier to use, and it's a good way to track your cash flow position as time goes on. We've got the opening balance here, which is basically what we start with at the beginning of the month in this case. The income summary, so that's the total money that's come into the business during the month. The expenses is the total money that's gone out of the business during the month, and the closing balance is what remains in our bank or in a cash on hand at the end of the month. So this is all completely made up figures. It's not due to any business. I'm just making it off the top of my head, but let's look at it in a little bit more detail. We're saying that in January next year, we're going to start the business up, and the owner is going to invest £5,000 of capital into the business. So they're going to put £5,000 into the business to get it started. I'm going to spend £2,000, get it up and running. Anything that I need, like trading licenses or startup materials, anything like that. This is our startup costs, and that leaves me with £3,000 at the end of the month. So £5,000 came in, £2,000 went out, and that left us with £3,000 at the end of January, which means on the 1st of February, we've got £3,000 to play with. Now, during February, I made £100 worth of sales, and I spent £800 again, just keeping the business running and getting sorted everything that needed to be sorted, which left me with £2,300. And that continues on to the 1st of March, and so on. We make our sales, we spend our money, and we carry on going month by month until we get to the end of the year. And that's how I predict my income and my expenses to go throughout the year. This isn't a really great way to display the data. It's not very clear. Here is a better way. Using a line graph to display a cash flow forecast makes it so much easier to actually view the movement of your money. And immediately we can see we've got a problem here in September and October. And if we look here, we're down in negative figures. We're making a loss in those months. That's not good. My business can't trade if I don't have any money. But let's pretend just for 1 second that that didn't happen. Here's how cash flow forecast can also show us trends in our trading. We can see that if this trend had continued, then I can predict that around here in September, I would have had probably £2,300, in October probably £2,500 if that trend had continued, but something went wrong here. What happened? In the planning stages of my business, I said to myself, okay, I'm going to start the business. I expect, due to my marketing activities, due to conversations with customers, or due to trade industry norms in the industry that I'm trading in, I expect to make £100 worth of sales, £200 in April, £300 in May, and so on and so on. But I said in my business plan, I want to make an investment in September. Either that's going to be hiring staff or paying rent on a property or anything like that, on an office space, £3,000. So I had my income figures all mapped out, and I had my expense figures, how much it's going to cost me to run the business month by month. And I said, in September, I want to make this investment. I want to hire a member of staff. But unfortunately, the figures don't allow for that. I can't afford to hire staff. So what does that mean? That means that in January, or right now, I can already predict there's going to be an issue in September and October. And I can now plan and take actions to mitigate that. I can either plan to sell more and increase my income, or I can plan to spend less and reduce my costs. Or I can say, okay, I can't manage to make that investment in September. I can delay it and make it later on in the year when I have enough cash to sustain that investment. Let's take a look at another example. Other uses for a cash flow forecast is as part of your cash book, which is using it on a daily basis, which I highly recommend, again, particularly if you're actually started trading and you need to manage your cash flow on a day-to-day basis. So this is an example of 1 week of a cash flow forecast or a cash book using a cash flow forecast. And we break it down a little bit more. Different types of incomes. We're looking at the sales income, the revenue from your sales, bank interest you may get, other types of income, like you might get a refund or something like that, you can detail down here. And we break down the expenses, and I've done it by groups. It depends on what's most suitable for your business. You might be able to do line by line what each transaction actually is. And if that works and you don't have too many, that's a really good way to display it. But at the end of the day, the most important thing is that you are consistent, you are accurate, and you understand what each line of data means to you. So do the way that suits you. In this example, I've said today is Wednesday. So all of these figures over here are predicted. They're not actual figures. We don't know what's going in and out of our business, but I'm predicting this movement of cash in and out of my business for the rest of the week. Monday's already happened. We started our week with 2,800 in the bank. I made £100 that day in sales, and I had an order, £60 worth of material I had to go and buy for an order that someone placed with me. I paid salary. On Tuesday, I bought in £150 worth of sales, and I had another order for £20, and on Wednesday, and so on. So how did I use that data to predict my future data? Well, on Monday, when I had that order of £60, I knew I had to order the materials, produce the product, distribute it to the client, and they're going to pay me £300 on Friday for that order. On Saturday, I'm expecting to get £100 for another order, and on Sunday, £100 for this order that came in today on Wednesday. This means that I can put these figures into my cash flow forecast, and it will form part of my balance at the end of the day. That's what I expect my bank to be showing me at the end of the day on Friday, if that money comes in. When it comes to Friday and that money is not in my bank, immediately I can call my client and say, you are due to pay me today. Where's my money? And that allows you to control your debtors. Your debtors are a key element of your cash flow. You can't have people owing you money for too long, because you won't be able to continue to pay your bills and continue to trade. So it serves two purposes there. Similarly, with the expenses line, I've got here COGS, which stands for cost of goods sold. So that's my materials, my labor, my expenses that directly relate to the product or service that I'm selling. And I've predicted, based on, again, marketing activities or conversations with customers, that I'm going to get £40 worth of orders there, £30 I have to spend, 12, 20, etc. And I can then use this data. If those orders come in, I can predict what income I'm going to have for the next couple of weeks, and so on. Here I've put £40 on Friday for heat and light. So say, for example, I have to top up the electricity every Friday. I know every Friday I'm going to top it up with £40. You might have a phone bill due or whatever, but this is how it will work for you. And it's a very useful tool. So let's have a look at it. What makes it so important? It's exactly the same forecast as what we saw on the last page, but this time I've added a line for rent, because actually my rent is due this week. Immediately I can see that's going to be a problem for me. I don't have enough money to pay my rent this week. Whether it was Monday, if it was last week Sunday, if it was Wednesday, I can see ahead. I can forecast that I'm going to have a problem, and I can take action to mitigate that issue right now. That means that I can call my landlord and say, do you know what, I'm really going to struggle to pay you today. Can I pay you half now and half later? Or you can try and reduce some of your costs from earlier in the week, or you can try and sell more to be able to cover that cost. But either way, these will help you so much, because it's going to help you with your business credit score. Each business does have a credit score, and that enables you to be a responsible trader, and it builds your relationships with your creditors. So the creditors are the people that you owe them money. And if you are defaulting on your creditors, if you're not able to pay your creditors when they're due, they're going to stop trading with you. They don't want to trade with people who can't pay them on time. And that's going to lead to insolvency in your business. Your business will fail if you cannot buy and sell goods and services. Your business is not going to survive. So that's why this tool is so useful for you. It allows you to look ahead and plan for any eventualities, and then also plan, if you are making profits, how you can invest those profits in the future. I'm sure you've all heard of this company before, Amazon. Did you know that Amazon made no trading profits for the first 14 years? How is it possible that they've now become one of the biggest global trading companies in the world? Because profit is not what makes your business successful, it's cash flow. You would have heard from your bookkeeper or accountant or other trading men and women in your industry, cash is king. Cash flow is the movement of money in and out of your business. Money comes into your business, which allows you to continue to pay your suppliers, pay your creditors, pay for your bills, which enables you to keep trading, keep getting money in, keep buying more product in order to sell it on. If you don't have good cash flow, you cannot trade, which means that your business will fail. Being able to predict the future cash flow in your business means that you can plan for the future, you can plan for growth, and you can mitigate any risks. So that is a very clear example for you that it's not profit that gets your business to success, it is cash flow. It's very important that you realize that. The next time we're going to be looking at a live example of a cash flow forecast and a couple of different versions of it, so you can choose which one is going to be best for your business and enable you to create your own. I'm going to show you how to use a cash flow forecast and how to create the tables and line graphs, etc. That's going to help you be able to visually see the position of your business. And there'll be a free download available for you to just take and use as you want. So thank you so much for watching this video. I hope you found it useful. If you did, please leave me a comment in the box below. And if you want to get in touch with us, please feel free to do so. Thank you so much.